All right, good afternoon and welcome to the end of day review for today. And today is Tuesday, June the 4th, 2024. It's the second day, second trading day of this week. And this week we have non-farm payroll, and it's the first week trading rate, first trading week of June. So first trading of June right there. So very interesting scenario for today. Before we go there, let's go through what what we anticipate. Okay, so this week is non-farm payroll, the first week trading gap of June, and June we're gonna finish the second quarter. So basically, we are in week 23. 3 more weeks, we're gonna finish the second quarter, and we're gonna see how's the month of June gonna decide the second half of the year or the last 2 quarters right there. And basically, the non-farm payroll gonna release on June 7 right there. And then after that, gonna be the CPI data, which is on June 12th. And also Fed meeting, the same, is from 11 to 12. So on June the 12th, which is next week, it's gonna be a huge week. It's gonna be very volatile right there, because have the on the Wednesday at 8:30 we have a CPI data release, and then at 2 p.m. we have another high impact news, which is the FOMC meeting decision that are gonna come out at 2 p.m. So next week is huge, it's explosive. And then the week after that, we have option expiration for the second quarter. Yeah, so it's more than just standard. It's end of month, and then also quarter right there, which is the week after that, 28. So you have a purple exchange holiday. Yeah, so next week gonna be huge. And then we go back to the GDP data at the end of the month. So basically, a month we're looking for the first week with non-farm payroll, the mid-month, which is the CPI data, and the end of the month we're looking for the GDP data, and also the PCE data, which is a personal consumption expenditure right there, price index. So it's the last Friday of the month. That's how the data will release, the last Friday, which is 28 right there. Yes, 28 right there. All right, now we can go into the chart and see how the price moving today. Let's do reverse right here. So right here, we took a lot of trade today. For some reason, we took a lot of trade. Before we go into today, we think that it's gonna be a very consolidated. It's gonna consolidate, because we see that in the pre-markets, the right here, the candle at 2 hour and 6 hour is huge move right there. So we thought that it's gonna be move around there. We're thinking to ourselves that we will not get engaged if not break out this swing right there. and that's our news plans. But then it changed quickly when we try to engage. But anyway, let's see the last trade we take, which is trade number 7, which is this one. Let's see for 28 right here. Here's the last trade we take. It takes a while to figure out right there. We did engage, small side, and then when boom, we know that it's gonna go. So basically, it's have a signature that we already predefined. Basically, it's gonna be a real breakout at the level 52.888 right there. You have the signature 4-step right there. Break, test from below, and then break that level right there. And 52.88 is the high of the 930 right there, so it's very critical right there. And we see the setup is so beautiful, formation, forming right there. So you see that the high, the low of the 930 candle, you see that there? It create a equal low right here. So then it's gonna go down and drift that equal low, break that level. See that? Break the level, retest from below, and then break it again. That is the 930 level right there. And then at around 1:30 p.m. it break the high. The first break is the fall break, but this break is a real break. You see the difference right there. The first break is what you see that? It break and it tests from above. You see that? That is the fall break right there. But the second break, the second time it break, it try again around in the PM. You see the signature right there. It tests from below. It break it, and then it's reverse. Very well. You see that? It reverse way. That is where the auto block. In the first instant, it did test from below. You see that? It tests from 1, 2, and then it break it. And then test from above, and then it reverse. The second time, it really break it. It break it, test from below, it break it, and it reverse. That's signature for second leg up right there. That's beautiful setup. Let's look at the other setup that we saw, or we anticipate. We build up the model. This is another setup that is a second leg up. You see that? The very distinctive, very the same pattern right there, like this level, right? You see it tests from below right there, and it break it, and then it reverse. Then the second, the second time it break, it is the pre-break right there. You see, this is the pre-break. First break is the fall break, or just try to trap people who want to short, right? Who only want to go long. That's what I mean. If you go long right there, it stops you out, and then it run without you. We used to be in that crowd, but now we are doing better. Now we see the pattern right there. So this is the pattern for second leg up right there, which is similar right here, second leg up. In this case, the entry is at 150. Yeah, entry time is 150. But for today, the entry time is 130. Right? Actually, the entry time for this is 145. So around there, around 130. right? This one, the entry time is right here, 115. But today the entry time is 145. So it's around that time when we set up. It's not exactly, but around that time. And we know that today the X1, the high time frame gives us a very good bullish signal right there. It's engulfing candle reversal right there. It engulf this candle. Basically, on 1 hour time frame is second leg up, and the same right here. You see the second leg up. Here's another instant we have. It's the same idea. We have a second leg up there. The signature right there. 4 step. Retest from below. Break it. Reverses. Where the reverse is where the auto block right there. And then it break it. I think we do say the auto block. So the second leg up always give the auto block to enter. That's the real breakout. But if for the fall breakout, we don't have auto block. So that just keep that in mind. That is that. The entry time for this is 15:45. Wow, that's wonderful. 15:45. Sometimes it's late. 15:45. Wow. Yeah, only 5 minutes. Only 15 minutes left. And here is another scenario we see. Second leg up right there. This entry time is 10:45. So it's in the AM section. 10:45. So we have the entry time can happen in the AM or PM section right there. But look for this signature so we know it's gonna be second and leg up. And when it do the second leg up, we always have a good run. At least 1 hour above right there. One hour above. So that's we try to build a framework right there. To reiterate what we're trying to do. Is we try to build a framework for our system right there, which is the idea that when I price, right, when if the price test or reach a level, then the two scenario, only two. The first one is it will break that level, which is a real breakout right there. In this case, it's going to be second leg expansion, either up or down. And this can be in the context of trend continuation. And the second scenario is that it will not break that level. It's just a fall breakout, and the trend reversal is going to take place. So that's our framework right there. We try to work with the system. And today we have the first scenario, which is a trend continuation, second leg up in the PM hour right there in the PM. So we go in at the 13:45 right there, and we only aim for 52.97. That's it. We get out. I think we aim maybe less than that. We should have let it run, but we just leave the for a lot of profit on. We'll have a lot of money on the table. That's fine. It's just for beginner like us. We're happy. So let's look at the trade we took for today. That trade right there. Let's look at the record. Oh right, here's the trade we took for that setup. Okay, so basically you see that it break that level. It tests from below, right? And then it break that, and then it reverse. That is exactly here. It break the level, test from below, break it, and then reverse. Then we put a buy stop right there at 52.88 right there. See that? As soon that we go in. So right there is 88.75. Yeah, we go in right there. So we go in at 88.25. A good entry there. Exactly. 88.25. Yeah, we just go in one pip above that, because we just make sure that that's just we don't want to go exactly at that level, because somehow it just touched the level and it go down. So we just want to make sure that it will not be the case. So we put just one pip above, a quarter point above that 88. So it's 88, 52, 88, 25 right there, and we get our order fill. Okay, and we a little bit. Okay, so we move our target right there at 57, but we're kind of conservative. We want it to hit it, so we just put 2 bit below the 97, 52.97 right there. You see that? We go in with 5, right? 5 first, 5 contract first, and then when it we're a little bit nervous. You see that? When it moved back, wow, we're so scared right there. We say, wow, what's going on? Are we making a mistake or something? Oh, we're a little nervous, but anyway, it is, you see, at one point it really we're really out of money right there. It really go below our entry, and we get fearful, get nervous. But here's another thing. Okay, as soon as it break the level, we add 5 more contracts. You see some 10 right there. But the beauty is that as soon as we add 10 contract, it pull back. Oh, it make us so nervous and regretful about our decision. Well, I said, wow, how do we add that? And we just doubt about our decision. And that's the emotion we have to go through. And right here, we see that. We see it. And right here, we thought, okay, it reject right at it pull back, but that can give us an idea that it gonna rally. And you see the wick right there. That exactly we need that wick right there, right here. Because this level it break right, but it never and then it reverse, and then it break it back without any retest from below. So that means that when it rally, it's gonna retest the level. So it's a nature right there. So we kind of feel confident. So we decided to stay in the trade, not try to exit the trade right there. So yeah, at that moment we add 5 more contracts. So total with 15 contracts right there. But every time, as soon as we add the contract, it going down. It go against our position. So make us more nervous right there. But you see, at one point, wow. So at that 7, so we're in the trade around 30 minutes right there, 23 minutes. That's a good amount of time. And see that. Wow, you see that? At that moment we bring our stop loss to break even. We just hit break even, then it brings to break even. So we stay in the trade about 29 minutes right there, and then boom, our target got hit. Yeah, the next candle got hit. Yeah, we got the next candle. Somehow it's not so up right here. But anyway, you got an idea right now. Very surprised why I cut short on this recording. It's just so that we hit profits. Oh, maybe that the time too long. It split the video. Maybe that's the reason. But you got an idea when it go to 14, 15 right there. That's the candle 14, 15 right here. See that? That where it hit out a huge shine. So we just am very conservative right here. If we am at any level, we still got it, or we am at this level, we still got it. The huge, we still we leave a huge profit on the table. We leave, let's say this level. Yeah, we have another 2R right there, but it's okay. We're happy. So that the trade we trade right here is second leg up, real breakout, and after we take this trade, we got a huge profits, 5,000 something. We kind of, stop. We want it to be good for the day. We don't want to take any trade. But when it have this setup right here, very beautiful setup right here, which is a 4 breakout perfectly, then we have to take it. We just take one contract. The reason we do that because we want to do an exercise that make ourselves to take a trade when we see that setup, no matter what happen, no matter what going on with us, either we win or lose, we not feel good or feeling good, whatever. But that when we see the setup, we have to take it. So we did take that trade. So let's see how the trade. So that trade is right here. We check the green side. Okay, real breakout, 4 breakout. Okay, right here. No, not this one. This one is the other trade we already covered. So what's the other one? Let me see. Second leg up, 4 breakout reversal. Okay, we follow it here. So basically, at 1445 right there, we put a sell stop right there, because you see that it break the level and it tests from above. So break, test from above, then it's gonna reverse right there, because we just want to check the trade because the setup is there. We don't not aim for any big profits. We just aim at this level only, and we got what we want. Just a note right here that remember the buy side liquidity were rate twice. So basically this one take the buy side of this one, and this one take the buy side of this one. So you have twice right there. So that's a very high quality setup right there. You see that? That's the quality setup right there. So we took that trade. And at the same token, we look at this right here. It's also a setup for 4 breakout right there. But in this case, the long, in the long side, and this is the short side right there. And the contact a little bit different. For this guy, it's just you see one leg up, and this is just a retracement. And in this retracement, it had 2 legs down. So right here we did. So basically, the reversal is the completion, at the completion of 2 leg down retracement right there. Basically, you have break it, and then you have retest from below, and then it reverse. See that? So that's the 4 breakout. And remember, the real breakout, it have an order block. It have a one more step. We have a one more step than the 4 breakout. Let look. You see, it have the retest first. You have retest first, and then it break, and it reverse. Remember, the keywords is after break, it's gonna be reverse, not retest. Here, the real breakout, the retest come first, and then the break. But for the fall breakout, the first step is break, and then the second step is the retest. But for the real breakout, the first step is retest. So just switch between step 1 and step 2. And then on the real breakout, you have one more step, which is a reverse. So you have 4 steps, but on the fall breakout, you only have 3 steps. Just 1, 2, 3 right there. Break, test from below, retest from below, and then reverse. But in this case, in the real breakout, you have 4 steps. Basically, you have retest first, break, and then reverse. That's where the order block coming to play right there, and then it's gonna be break again. Right? That's the signature of the real breakout. Here's the signature of a fall breakout. All right, let's take a look at the recording for this trade when we took right there. All right, here the recording for the trade that we take a fall breakout right there. Basically, at when you see this setup, it break and then test from above. That's where, yeah, we put in the buy stop at 53.07. It gives us a sell stop right there. So you see that? You see, yeah, as soon as we saw, yeah, as soon as we saw that, we going. We almost, like we said earlier, we almost skipped the trade because we just check a huge profit right here. You see, 5,000 or something. We're thinking about we call for the day, but then we think to ourselves, no matter how we feel, as soon as the setup, that's how we need to follow the rule, follow our system like that. If the system give us a signal to go, then we have to go, regardless what we feel. That's where the consistent coming and play a role right there. In this case, it's just for exercise purpose, we just takes one contract right there. Yeah, we would at 50.0675 right there. Yes, so we get in right away, and we very conservative, want to take the low of this one. But then it not hitting us, and we cut down ourselves. We said, wow, maybe it's not working. Then let's see what happened. And at that moment, yeah, we did down ourselves. I said, why you take this trade? You already make huge profits. But anyway, we must take the trade, because that's how we exercise ourselves, how practice. How we tell our subconscious mind that when the trade setup is formation, then we have to take it. So right there, it pulled back a little bit. We come a little bit down, but you will see that, and the trade curve very short. And now we feel like, okay, we need to move the stop loss, the target to the right level in the chart, so we can target better than this. So see, that is almost hit our target right there, and then it pull back. In that 15 minutes, lots of time we're thinking about cancel the trade, get out of trade. But anyway, we say, why we do that? Just follow the setup. If we hit that, look at that. So we get hit, and we just take about 200, 1 hour, almost 1 hour profit right there, and we get out. Yep. So that's the setup right there. Yep, so that's 2 trade, and go to trade number 5. We have is that trade number 5? Let's take a look real quick. Oh, here the tray number 5 idea right here. You see that we mark that range right there. So basically, after this, we see it tests from below, then it can break the level. And then it tests from above, then it can break down the level. So basically, we put a sell stop right here and buy stop right there. Let's see how that idea working. And you see that where we put right there, 82, and right there, buy stop right there. So we anticipate that if it touches it level, it can break it, and if it touches it level, it can break to the outside. So that's our idea right there. Let's see. We just try with only one contract. So right, it just touched the level, so we get in for a long trade right there, and you see it's amazing. You're gonna see what really happened. It's very fun. And we try to move the target very low, but it don't even hit the target. Okay, we move back up again, and then we said, wow, maybe it go up there. We move again, man. You're gonna see that. And now we are, boom, you see that? It retraced back, and we put our stop loss very tight, and we got our trade. And let's see what happened to this order, the sell order. Let's see if it's gonna break the level or not. Okay, so basically we have it swing both ends right there. It swing the first up to get our long order in, and then it stop out, and now it swing low to get our order fill in the short side, and then you see what's gonna happen. Boom, it stopped out. So in theory, we thought that only one trade got executed, but in reality, both the long and short can get executed because it swings both ends right there. So it's a little bit tricky right there when you are in the so-called consolidation mode right there. Yeah, so basically we go in, we have that. Okay, so now it come back there, so we go along again. All right, let's see. Go along again, and now we add one more contract, 2 right there. And I think, yes, right here we feel, wow, it's not right, so we get out of the trade. See that? Get out of the trade. Want to see something else? Yes, that's the funny trade there. Both ends it got swing right there. That trade number 5. Alright, let's do one more trade right here. So this trade number 4 and 5, 4 and 3 right there. Basically, this trade is we have 4 more right here. It not have a real setup. If we look right there, we see that, okay, we test from below 1, and now it tests from below twice. So we think they're gonna break that level. That's an idea that we try to go in right there. We go along right there, but let's see. But we get stop out right away. See that? Get stop out right away. Then we think to ourselves, wow. Then you see that break test from above. Then it can break the level. That's what time is that? Okay, so 10:46, which is this one. You see that? So it break and then break the level, and then it's hang above that level. Then it gonna break the. It can go break the level. It gonna break that down level. So that's the idea. So as soon as we saw, we go short right away. Our long got stop out, right? And then as soon as it break down level, we short right away. And we target very close right there. We just leave the predefined target, which is 5R right there. And it did hit that. You see. Yeah, it did hit the target 5R. Yep. So it did hit that trade.
The markets are open.
By the way, if we let it run, let me see, if we let it run, we will let it run. So basically it will let it run, right? We go in right here and we let it run until this level 78. We can have, you know, almost 2R right there. But anyway, we just get 1R and we get out. Yep. So that's for trade number 4 right there. Now let's see trade number. Okay, here's our trade number 3 right here. So basically our idea that it's a long trade, right? Because it just break that level. Let's go back to the charts. So right here, you see that it break the level. It tests from above and break it. So there's no reason to come back. The only reason to come back is to reverse, break it back. That's the trade idea. So we're going and yeah, we go long right there. But then we get hit our target right away because we try to manage our stop loss. So we just move our stop loss. We don't have enough time to move our target, so it hit right away. You see that? It hit right away. Yeah, so we had 250. It hit right away. So then we say, well, we have to re-enter it. So we re-enter them. After, yeah, we enter them. So we're going to go up hit to that level because it tapped that level. It will, you know, retest that level again, and it did happen exactly. See that? Yes, it did test the level. So basically right here, we see that it tapped level before going down. Then if it break the level, we're gonna test that level, and that exactly happened. So that's trade number 3 and number 4 right there. All right, let's look at trade number 2. See what mistake we make. Here's trade number 2. Right here we thinking that okay, it retests that level. We basically trade right here. I think we go long because we see that level right there. We thought, well, it's gonna be gonna hit that level because it's a rejection right here. So basically, it's a full mode trade. That's the error we need to make. We should not go in right here. But look, for the long trade, it didn't hit target, and you see that. You're gonna see that. And yeah. Yes, so we don't see it right, so we just close the trade before hit our target right there. So we go long right there. It's a full mode trade. That's an error we made, and we don't feel right, so we close it. And because as soon as we see the setup right here, test from above, then we know that we make mistake go long. So immediately we go in and reverse the position. We're gonna go short. Yeah, as soon as it break level, we go short right away. And we succeed on this trade. We hit our target 5R, 1R right there, 5 point. Yep. So we make mistake right here, and then we fix our mistake right away. But this is a full mode trade. We should let it form, and then we would sell. So we don't have to lose 1R right there. Not 1R, but it's half an R. Alright, that's it, the trade 2, and now let's see trade 1. We make a mistake on trade 1 right here. So in this trade we make mistake when we chase right here. We have to let it form and short them instead of go long. All right, that's a great lesson for to learn on this trade right there. So we engage around 10 o'clock right there, 10:07 right there. So basically we see that it tests from above twice. So we thought that it's gonna short right there, huge rejection. So we thought that we're gonna do a sell right there. If it reach level, it will break it because already retest from above twice. And let's see. Yes, we short right there. 52.81, which is this candle right here. 52.81 around here. So basically we see that it tests one, tests two from up. So we put a sell right there. That's our idea right there. We'll sell right because we anticipate it's gonna break that level. That's our idea right there. Okay, let's see. Yet we got stop out because with our stop loss too tight right there. We want to reach 150 and again 250s. We just want we don't adjust the stop loss. So that's the reason why we got stop out right away. So you see that stop out, and then here's now another trade idea. Okay, we short one more time. You see that? Short one more time because the setup is still there. That's what we're thinking. But however, it did not hit our targets. In this case, we put 77, 52, 77. This level. Yeah. Oh, 50. Wow, it's 75. 1 pip above. That may be the reason. Yeah, right here. If 57 right there, 50, 57, 75. We put 1 pip below that. That may be the reason it did not hit. Let's see. Yeah, basically we got stop out again. You see that? So we short twice and we got stop out because the volatility right there. So we learn our lesson that if we see the volatility should not engage too early because it's easy to top it out, and we see that we short one more time. And now we engage into how many contracts right there? 4 or 6 right there, and we put our target too low because too early for it to go down that. That's the mistake we have right there, and you see that? Wow. And as soon that it come back, I think we stop out. We close the trade right away to protect ourselves. And then we go long, and we say, wow, if it break this level, why go back there? Only go back there to reverse, right? And that's what we go long. Yes, we go long right there, and we long very aggressive, 10 contract. And let's see, what mistake we make right here. The mistake we get right here is that we aim for this target too soon. Eventually, it's gonna hit that, but the algo decided not to do that. It's going to trap more liquidity, so it did not hit that level. See that? It did not. You see, at one point we it did not go a level. So we lesson learned what don't engage with the big side too early. Just do one side only, one contract only. Let a set of form, and we are in big trouble right there. See that? Huge loss. Our money. 2,200 right there. We're so nervous. But eventually it go up. Okay, it go up, and you see that we hit the profits right there. Wow, see that? 3,700. You see that? But we are a little bit naive. We put a target too high because we look at the big number. It's so attractive. That's one of mistake we make. As soon as 1R above 200,500, we need to get out. Yeah, we need to move our stop loss above that level, and we didn't act quickly. That's why we give yesterday. As soon as it come back, we get our trade right away. So we don't want to be give all back. So we get about 1,000 something. So that's a lesson learned, huge lesson learned for it right there. Don't engage a big side when too early. Let the market show its hand, in the PM section. All right, that's all the trade we took today and our lesson we learned. Okay, so we have a beautiful setup right here. If we look on the 1 daily time frame, we can see that right here. So let's delete some of this so we can see more clearly. A little bit hard to see right now. So let's remove some of the thing right there. So basically right here, what do we see? Here's the daily time frame. So what we see? Okay, let's remove this symbol morphic for now. So we see that this is a engulfing candle right here. So basically it's a leg up and this is a retracement, 2 leg retracement. And the question for us is this complete the retracement complete, so it's gonna rally, but at the same time you see the setup, short setup right here at this level. Let's delete this one. What the low of this? 96.75. So you see the sell setup right there because it's break the level and then it hang right there. So it can be, if it break the level, it's gonna come down. Very interesting right there. But also you see that this retracement is complete with the reversal right here. Break it, test from below, and then reverse. That's the 4 breakout right there, and with a huge engulfing candle. So it kind of can go either way. So we have to observe to see how the market gonna, how the algo gonna run through those price level. I think basically in this range right here, between this level and this level, see how the algo gonna do that, and then we just respond. If we leave it a good setup, then we will take it. Either short right here, when it break down that level, you're gonna short. And long, we don't see the long right now. We don't see the short right there. What the idea for the long right there? Okay, the long maybe right here at the level. You see that is break, reverse back right away, test from above and break it. Break it, and then you see that we can have a long setup right here. So the market in a very tight range right there. So basically at this level we have a long setup, which is test from below 1, 2, 3. 3 times that it tests from below. What the low of it? 75. So the rand right now is real tight right here on the 1 hour on the daily time frame right there. So 96 and 07, it's a good range. It's tight range on the daily, but if you trade 50 minutes, you have I think more than 2 hour 3 hour right there. Yeah, it's 2 hour, 10 point right there. So it's a tight range right there. So basically at this level, the low of the range, you have a short setup. If it breaks that range, then we short them. And in the upper range level at the 07.75, we can go long because you see that it tests from below 1, 2. It break it, and it tests from below. Yep. So that's our thesis for long or short for tomorrow or for the rest of the week right there. I want to see how it's handled right there. On the weekly is on a weekly right here. So on a weekly we have the level right here. Where's the okay? Yeah, I think the level weekly a little bit messed up right here. Should be the low of this one. So what's the low of this one? 73, 52, 73, 50. Yep. So it's basically on the weekly it's more bearish because you see that it tests from above this level, the level right there. Just delete one of them so that's confused. So this level right there for the weekly is bearish at this level. See that test from above twice, 1, 2, 3 times. So if it come down to the level at 53, 73, 50, then we can short them for sure. Right here, short them. Yep. So in the weekly it's more bearish, but in the daily it kind of neutral. Either right here, bearish right here, short right here, or long right there. So let's see how it's play out for the rest of the weeks because we still have a huge impact news. It's non-farm payroll. Let's see how it's set. How it's setting up for the whole month right there of June. All right, I think that's it for today. We're always grateful for this opportunity. We thank you for your time and interest, and we do what we love. Then success coming our way. Have a great evening, and talk to you tomorrow. Bye for now.